Stocks higher after a U.S. court struck down President Trump's tariffs, declaring them illegal. The Nasdaq also getting a boost after Nvidia topped first quarter results, revenue soaring 69% in the most recent quarter. Joining me now, we've got Ivana Delevska, who is the Spirit Invest founder and CIO. You say that investors have abandoned the AI trade and will have to come back and chase the high quality stocks and AI stocks like Nvidia. Why is that?
So that's right, Brett. Thank you for having me. Basically, as tariffs started getting announced and the economy became a little more uncertain, investors sold what they own, and they were really overweight the AI trade, specifically people that didn't quite understand what they were getting themselves into. So it was a real exodus coming out of names like Nvidia, but even more so in some of the smaller caps. And right now, as we approach second half, we're seeing the Blackwell ramping really well, and that's going to drive the entire value chain up. So we are very positive on the second half. So we think as we get closer to that, investors will have to come back and chase it.
What type of flows back into Nvidia did we see, even leading up into this earnings print, from what you were able to assess?
Well, for Nvidia specifically, it was really people coming back to it given the cancellation of the diffusion rule and a few other positive catalysts, like people thought that DeepSeek was going to be a headwind. It's actually turning out to be a tailwind. So there's been several positives for Nvidia specifically. For some of the smaller caps, there's also been a lot of short covering that we've been seeing. So the first leg up, I would say, from the bottom was mostly short covering. I think institutions and hedge funds are still quite underweight. And as they come to the market, I think that's when you're going to see the next leg up for these stocks.
What's the most underappreciated portion or sector of the AI trade, if you will?
Well, there are several sectors that are underappreciated. One example is power generation. This space basically came under a lot of pressure, but it's actually not even going to be negatively impacted by tariffs, right? So as you have more onshoring, there's going to be more build out in the US and there's going to be more power demand. So I would say that one sector is pretty misunderstood. Another area is networking. You're seeing a lot of the networking names sell off today, like Arista Networks, like Marvell, and those stocks basically are positively impacted by the AI trade. Some of the comments that Jensen made regarding their entrance into networking is making people nervous about the rest of the networking plays, and they're thinking that maybe Nvidia will gain market share. But even if they do, the market is growing at such an exponential rate that there is some piece of the pie for everybody here.
You mentioned tariffs, and it's rare to have a day where we're coming off of Nvidia's earnings report and that being one of the major movers of the market, but also the relief perhaps that we're seeing also in today's trade really tied back to how the Trump tariffs are essentially getting blocked by a federal court here now, and the larger implication of, okay, how much of these tariffs are actually legally going to remain in place? What is really taking the cake here in terms of moving the markets during today's activity?
Well, during today's activity, interestingly, we would have expected a little bit of a stronger reaction to the tariff pushback. I don't quite know whether it's because people think there's going to be a workaround and they're going to become still legal, or it's because people already kind of expected that there is going to be some sort of a resolution. So we would have expected a little stronger reaction to the tariffs. So I think most of today's action is really centered around Nvidia, and maybe in sectors outside of tech, like consumer, you're seeing a little bigger relief because they're actually getting more affected by tariffs directly. In the tech space, we're not really seeing as big of a relief as we would have expected.
And so as you're kind of lining up your checklist for what you need to hear from companies, essentially at the end of the earnings season, dare I say, because it seems like it's the build up to Nvidia and then it's the falling action thereafter this point of hearing from Jensen Huang and the company. And there are a few retail companies that are going to trickle out as well that have been trickling out. But from what they're saying around tariff, it all seems like some of the projections are still up in the air, and it places a lot of pressure on the next earnings season to see how companies are revising some of their language around what the guidance looks like as well.
So it's kind of a mixed bag for our sector. A lot of our stocks that are directly impacted by tariffs highlighted what the impact would be and assumed somewhat of a worst case scenario in their margin. So they're really going to see it more on the margin on the margin side. And it was about 100 basis point impact, I would say, on average across the board for the more manufacturing type businesses. Now with those tariffs getting maybe less severe than people expected, there could be maybe some upside to the margins that they projected. Now on the revenue side, that's the real question, right? Whether as goods become more expensive, you're still gonna wanna buy them. Right. It doesn't affect as much B2B, which is what we focus on, so that's our main bread and butter. But I think for some of the consumer stock, that's really gonna be the question. If things are 20, 30% more expensive, would you still wanna buy them?
Ivana, great to see you. Great to have you here in studio with us. Thanks so much.
Thank you.